Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, December the 16th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. With options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, Mr. Tucson. We have wave 1 done, working on wave 2 down. We've been discussing this for the last multiple months. When we came down here, bottom and started retracing a few months ago, I said, I don't think that wave 2 is over here and we're ready to go breaking out. We then bounced and then went on to make a new low. Now we have this swing point low. And even as that was bouncing, I still said, not convinced that this is the end of this move. Likely still going to go lower. But remember, this wave 2 will end at some point, whether it's here and we are going to go breaking out or we go lower. We're probably going to reverse somewhere between here and our original target from over 3 years ago, around 80. But remember, once wave 2 is finally over, the plan is to go breaking out above 114.72 and we make new highs. That is definitely the plan. So why do we think a few months back that we were likely going to make a new low, which we ultimately did? Not by a lot, but still made a new low. So we shifted this 2 over here, and this is a moving target. So are we going to end here? I don't think so. I think we're going to come lower. Maybe we just keep grinding lower for another year or so. Who knows? Maybe we ultimately come over here. It's possible. But remember, again, at some point, we are going to end wave 2, and we're going to go breaking out. Why did we think this a few months ago, and we still think this is not the low just yet? Because you go over to the charting platform, and we've been talking about this for the last several weeks. We haven't officially closed in below this 97.80. But we did close below that 98.50 we've been talking about. The other day, we got that red candle body closed below 98.50. That was like a major battle zone. It was former support, turn resistance, 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 support. This kind of zone flip-flop multiple times. And that's why we said we start closing below 98.50. The writing's kind of on the wall. We're going to continue to go lower. Well, we did this little exercise using our 2-point tool, and we started with the swing point low over here. And when we rallied up, we pulled back. We said we start closing below this 99.50, 99.60 area. Then that's a high probability we're going to go visit 98.70, 98.60 area. Well, we did that. We kind of hit the 1.448 bounce, then came down and reached the 1272 of that move. So we're continuing to break down. So we went on to say, well, the likelihood we were going to reach these extensions was high. We reached them and then some. So then we did this. We moved on. So what about from that swing point low? We start closing below now 99.20 area. That sets the tone. We're going to go visit this 98. 30, 98.06 area. Well, guess what? We kept going down and we're now reaching those extensions from that swing point low. Why is this important? Because as we continue to rinse and repeat, we go to this swing point low. Now the move, it constantly pushes your 618 down a little bit further, but this candle, red candle body the other week, that was last week or so, on December the 3rd, so almost 2 weeks ago, we had this candle body close here, which says we have a 75% chance we're going to go visit 9768. And we have a 70 plus, we're going to go visit 9738. And why are these two extensions very important? Because if we get down here and close in this area, which hint, 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 that's where I think we're headed, right? Still got a 75% chance we go to 97.68, and a 70 plus we go to 97.38, and both of those are below the prior swing point low up to the current high. That's below this 97.83 area. And why is that significant? Because if we get down here and close, then all of a sudden, Mr. Toussaint, Ian, James, Emil, we have a 75% chance we're going to go down to 95.64, which is a new swing point low. Got it? And then a 70 plus percent chance we're going to go visit 95.11. So that's why I kept saying we shorted the dollar going down. We bought the euro dollar going up. We bought the pound dollar going up because we expected as the dollar breaks down, those like pairs are going to go down like dollar yen, and the secondary pairs like euro dollar, pound dollar, etc., were going to bounce, right? So this is starting to break down. We got what we initially wanted to see. Well, remember, we started with this swing point low here. We broke the 618. We reached the extension. We moved it down. We reached those extensions. We're now at this swing point, which again, we still close below that 618 level, which is a rule. 75%, you're going to go to this 1448 sitting at 97.68. We're getting closer to that target. And then, of course, the 97.38. And both of those, again, are below this 97.83 target, which is that low to high, my 618. And again, once we get there, hint, 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 that's where I think we're definitely going. Chopping, grinding, laboring, decline. But once we close below there, then all of a sudden, we have extremely high probability we were going to go down to this 95, at least make a new swing point low like we did the last time. Again, it wasn't by much, but if we come down to this target, that's not a whole lot either. Got it? So the plan is what? The dollar to keep grinding, laboring, decline toward these ultimate targets, even though we officially haven't closed below 97.80 yet. We have taken out what I call a critical battle zone of 98.50, which is the same writing on the wall. Expect this is going to grind down and test this low and likely make a new low, which my targets below the low would be these here. Fair enough? All righty, so let's look at the software and discuss why that was important. Well, on the daily chart, we got the daily reversal we were looking for. We said, let's sell this trigger lower, and we're in this position. The reason it's not showing the trade running because we had a new contract change, so it's a different trade now. So that's why it's not running on this chart right now. That's my demo account, but it is in other accounts, right? So this was a contract change in this demo platform. But our euro dollar trade is still running. We're up over 200 pips. We're in a position of authority, still expecting this to grind higher. So this is a winning trade no matter what. I do expect as the dailies made the cycle, we got our weekly reversal and we got the hook and the cross. We talked about this slingshotting back up. We got the PAI hook. We got the trend momentum cross. We got the daily reversal. And now expect at some point, Emil, this is going to stair step. And yeah, we may see this turn over to slingshot, but this is what we've been calling for. Daily cycle. Then we expect it'll start slingshotting higher and higher as this continues to grind higher as the dollar breaks down. The inverse relationship, the euro dollar, is going to continue to climb higher. That is the plan. Amen. And the same thing with the pound dollar. Up over 228 pips. We're in a position of authority. I'm expecting this to continue to grind higher. Why? Well, I love going back to the same thing we did here, where we got the swing points. We break the 618, you go to the extension, you switch it to the next one, you go to the extension. Now we're looking at this swing point low to high. We're now just about to reach the extensions. What's next? The prior low to the high. Here's your new target. So let's do the same thing with the euro dollar now and show you why these targets and how they've been coming to pass. Initially, we had a high to the low on this initial move, and we broke the 618. We went where? These extensions. We reached them. So then we look at this swing point high to low, and what are we looking for? The extensions. Guess what? We reached them, right? Remember last week or so, we started targeting, well, your first upside target would be the 1670, 1700 area. Then, once we reach that, you can start targeting 1760 to basically 1800. What did we hit so far? A high of 1804. Not too shabby, is it? And as we continue the grind, we then look at the prior high to low. That 618 from this high to low is right there. That was at 1750 area we've been talking about. And guess what? We closed above that 1750 area, not by a lot. You can see the close right there on that candle was 1753. Woohoo! That made it just above. And today we're sitting above, and this candle hadn't closed yet, but that's a couple of pips higher than what that 618 level is. So that should mean we're going where now? 119.80, 120.30. So this is going to grind. Expect we're going to get a correction. This thing doesn't just go straight up. It stair steps higher, and even when it was correcting, it stair steps lower. Always stair steps no matter what the trend is. The trend is up, you stair step higher. The trend is down, you stair step lower. Got it? So now that we reach these targets, we may likely get a little bit of a retracement. Well, is that logical at this point? Yeah. Check out the software. It is very logical. Here on the euro dollar, our daily is getting overbought territory. Now remember, I'm expecting this to do what it's already done. It made it to overbought, it turned over and a little slingshot higher. We did that little pullback, slingshot higher. I'm expecting more of the same. Pull over, turn over, slingshot higher, pull over, turn over, slingshot higher, stair step higher. So far, so good. So what are the next targets? You simply come back to this platform, and the next immediate target is going to be 1818 to 1854. So far, so good. That's from this high to this low. That's those extensions. And then ultimately, when we get to 1850 area, we then go from the prior all-time high here, not all-time high, but the recent high back in September, to the recent low here in November. Now we're looking at the bigger move, which says this close right now above that swing point high of 1750, right there, that 618. We already did it, right, Emil? We're already there. So we have a 75% chance. We're going to 1980. 2030, 75% 1980, 70 plus 120.30 area. So is it going to go straight up? No. it is going to grind and stair step, but that is the plan. And slowly but surely, we get in there, get your profits, you go to the next level, you go to the next level. So this is why I was looking for this big move to start. And in incremental steps, you go, well, does that mean I can't trade this dollar, in this case, the euro dollar? Because we're here, that means I can't trade this thing until it breaks 1750? Depends. I was telling you in the daily reverse, let's buy it then, because then we can incrementally take some profits along the way and continue to maybe even buy the dip while we continue the process. But remember, no buy, sell the whole recommendation. I can't tell you what to do. I can only show you what the software is telling us and what I'm personally doing. But we're long the euro dollar. I love it. And continuing to look for that bounce. Next target up since we reached the previous ones, 18, 1850, followed by then 1980, 120.30. Fair enough? All right. So same thing holds true for the pound dollar. We talked about the same thing. We had this prior high to low. We finally broke above this 132.95 area with that big green candle there. And now we're looking for what? 135.38, 135.97, basically 136. What happens when we finally get there? From this high to low, we're going to get above that 618, which is up here around that 134.50 area. That's it. What happens when we close above that, which we're testing it now, but what happens when we start closing a candle body above that? Then you start targeting 138.30, 139.20. And from the recent high of highs, because that was the, looking at price act, this is the lower high of the two, but these are in confluence of events in the 39 and basically 140. This is 138.30, 139.20. But that's why we instantly do this. We start talking these from that high to that low. We break above the 618. Where are we going? 35.38, 35.97. Well, that's still another 100 plus pips to get up here. Then when we get there, we start targeting 38.30, 39. And when we get there, we start targeting 39, 140. And then onward and upward we go. 141, 142. But that's the plan. The dollar keeps breaking down. The euro dollar, pound dollar are going to continue to go up. And the software set up that beautifully utilizing the same method. What happened? We got a daily reversal. We got the trigger long. And we've been in a position of authority for weeks now. And I'm going to continue to let this baby run. And even these, we got in even after, because I was in class when they asked, let's go ahead and enter now because it's still going to go higher. The plan is already in motion. So again, what do we expect this software to do? It's going to turn over to slingshot higher, turn over to slingshot higher, turn over to slingshot higher as we grind further and further toward our targets, which are further up the food chain. Got it? All righty. What else? Well, let's continue. It continues with not just Forex, but we're going to go over all the markets. Dollar yen. Started telling you, look, the dollar yen, you should look to sell the dollar yen. Why? Because as the dollar, US dollar index breaks down, we're likely going to see this dollar yen break down. And we had the same scenario. So you go over here to the software and you scroll over to the dollar yen and the same thing. We got up 142 plus pips. We got what we were looking for. We got the trigger lower. We set the tone for us to start going lower. And we're in a position of authority. How do we do that? Well, my stop loss is up above the prior swing point, up near that battle zone over here. So what can I do? On-screen program, you can push the BE +1. Now, this is a trade that is no longer at risk. It's simply a guaranteed winner. Even if this thing reverses and goes breaking out, it'll stop us out for profit. I like those odds, right? I like it. So as the dollar is expected to break down, this too is expected to break down. And we're looking for more downside on this trade as well. That holds true to the other pairs we talk about. Pound yen. Pound yen's grinding lower as we speak. And the same rule was, remember when this started to break out, the higher it goes? We talked about it weeks ago. And when this started to set up, we got a little daily trigger lower. We got in, made a few hundred pips. We got pipped out. Went lower again, made a few hundred pips, got pipped out. And I told you, I'm waiting to get back in this thing, get to my position of authority, and establish a longer term down move, because the big picture with this was, and just to review, go back to COVID, I said the pound yen was going to go up about 8,000 pips and retest a prior high, which was here at COVID low. We talked about this thing going to test this prior high over here. And I said it would take years to get up there. It did it years later. And then we got this big unwinding in August of last year, which was called the carry trade unwind. The markets just regurgitated all of that big gain. This thing went down in a very quick time. It lost about 2,700 pips. Well, we've been discussing this for months now, and this move lower looks impulsive. Then since that low, we've been grinding overlapping price action. And even with this run up, this still looks like an A, B, and we're coming down in C. So that's why I kept establishing a short position, because you get to that position of authority, you make some profit. So what if it stops us out for more profit? So right now, the software, and reason I'm very big on the pound yen going short, is the software is screaming it. And let's go over to the pound yen and look at the same. And we have a pound yener here. And what do we have? Up 120 something pips. And we're expecting this to continue to go lower. I've already did the BE plus 1 on this one. As you can see, it's no longer got a little highlight around it. So you can tell it by what? We're up 120 pips. We got 119 to stop loss. So that's what we call break even plus 1. So Mr. Tucson, yet again, we're in a position of authority on this. Why am I excited about this going down? Not only the structure and the price action, but look at the software. Monthly, overbought territory. We started the carry trade unwind when this monthly grinded, made the new high, went up. We had the big 2,700 pip pullback. Got the monthly start turning over. Now it turned back up. It's back in overbought territory. Monthly overbought. Weekly overbought. Starting to turn. Daily overbought. Hook and cross, steep slope angle separation. There you have it. So we're looking for this to continue lower. Are we going to get to this take profit? This take profit? Are we going to go down thousands and thousands of pip and start to look for that prior swing point low? Maybe. But it doesn't matter. We made a few hundred pips here, got pipped out, a few hundred pips here, got pipped out. Now we're up again, and we're in a position of authority for this thing to go lower. Fair enough? And I wanted to add one more to the list, and that is the euro yen. Euro yen looks very similar to the pound yen, but the software is setting up the same way, Mr. Tucson. We got this rally correction, rally. Looking at the bigger picture, we're reaching those extensions from the prior high to low. We're reaching an extension up here, which is a good time to get a nice pullback off of that. And more importantly than the technical picture up here, pullback, is the software is also setting up for this dollar yen. similar to the pound yen in that it has all the time frames in a position of a big move. So break even +1, we're in a position of authority. If this thing reverses and pips out, you got some profit. Otherwise, I'm looking for a lot more downside in the weeks and months to come. Why? Daily overbought, weekly overbought, monthly overbought. So is this thing in? Doesn't matter. Once you're in a position of authority, what happened? It could pip us out for some profit, or it can continue to decline and we make a lot more profit. But this is why I'm setting that up, and it takes effort. Mr. Tucson, just because the monthly is in overbought territory does not mean that's exactly when this reverses. It just sets up a high probability once it starts to hook, you're going to get a several hundreds of pip follow through. So far, so good. You drill down on these lower time frames, and that's exactly what we got. This thing was up right now. It was 100 plus pips, and it's bounced a little bit. But the plan is to go lower in the coming weeks, days, even the weeks. Extremely overbought. We need to depressurize on this thing. So that's the plan. Amen? All righty. So let's continue. What about our markets? SPY made all-time highs the other day. Well, ES did not. So let me go out to a daily, and I'll show you the two. But what are the markets expected to do? We kind of talked about this the last several weeks, that we are expecting a blow-off top where we go up to around 7,000 or maybe 7,200, and we pull back this bigger picture. This direction, we can see the big bubble we're expecting. At some point, we're going to get up to that 7,000, maybe 7,200. That is still the plan, but do we need that correction first? I've been leaning toward the correction. Going to last week, I got a nice little dip and we've been chopping, but we're still expecting, probably is what I said in our log here, expect markets and dollar index to go down, euro pound to go up. So we just showed you that. But let me update. That was on the 10th. So let me update the prior classes where I gave a little bit more information, as this will update. And it says right here, expect markets to retrace before hitting all-time highs. That's what ATH is, all-time highs. So have we started retracing since the 11th? And you go back to the software on that, and that's basically exactly what we saw since the 11th. We kind of started pushing lower on the 12th, then we go on to Monday, yesterday, and then today, starting to see that process where it's just kind of grinding. But I'm not convinced that this is ready to go breaking out just yet. I was truly looking for a deeper type retracement, and this thing could go lower to bounce to go up to the bubble. And if we don't hold this green box area, which is my 61878, from this low to that high, that's the support zone. So if we don't hold that, then we're likely this is even a bigger A, B, and we come down in a C, which would bring us down near the Magic Fibo. We need to see a new swing point low. So if this area doesn't hold and we get a candle body to close below this green box, the probability we go further down is very high, and the probability we make a new swing point low below that one right there, this guy right there, is high. But could we just come here to bounce? Absolutely. We don't have to make a new low. This could come down here, bounce to go on and make your new high. All roads are going to lead to the bubble burst up here, where we go up to 7,000, maybe 7,200. Any questions? So be careful with this. Even as the uh, Fed rate cut, we said that we may get some downside pressure after the Fed move and the jawboning. Well, it's just typical that we're seeing this chopping overlapping. Reason we're still so bullish on the fact we're going to go up to the extension, because from the prior high, all-time high, to the recent low, we took out the 618 and the 786, right? We just haven't reached those extensions yet. But this is typical, where a lot of times you'll start to break out and stair step toward that target. It doesn't mean that once you close above the 6180 meal, you have to go straight to it nonstop. Every day has to be a green candle. That's what the 75% chance means. No, you can come back and retest the 618 retracement. You can even come back and test a Magic Fibo and do it. So no matter what I look at, all roads lead to a blow off top. And just be careful right now, because I'm not convinced that this is ready to go blasting off up here. We may need some more of the downside correction, and this could last into, maybe we don't get the official Santa Claus rally. We only have like 11 more trading days of this year. This thing could just grind sideways and just kind of chop and grind and come down here. But just remember, the technical picture is the technical picture, and it's not a time limit based technical picture. Whether we get here tomorrow and we bounce, or we get here January the 7th or 8th, sometime into early next year, and we bounce, it doesn't matter. If we hold this and then we go breaking the high, we're going where? 7,000, 7,200. If we don't hold this, then we have extreme high probability we're coming back toward the Magic Fibo on the daily, and we're going to make a new swing point low. Everybody with me so far? So this is what the 3-point tool looked like: high, low, lower high. If this is the A, the B, and the C, then we really need to come down near this Magic Fibo. Well, what if this was the three correction here and we're ready to go blasting off, and this is the stair step for us to get there? Then expect that this green box should hold. Is it possible? What's the probability we just go breaking out to up here? Probability we go up here is extremely high. The question is, do we need to go lower first to get up there, or even a bigger correction before we get up there? So far, so good. So this is why I was warning you. Once we started to get this move up here, we're probably going to need a pullback. We took a lot of energy after that pullback here. Green day, green day, green day, green day, slight little pullback, green, 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 and it started. It was a lot of, energy here. So we usually need to either consolidate, which we've kind of been doing, and I've been warning you what. How do I know we're going to go down here? Mr. Tucson, we have to take out 6,800. We came down to 6,805, right there, 6,805 on that candle the other week, on Friday. It didn't break 6,800, and we're still chopping in this zone. But from the recent high to low, just on that pullback, we're struggling at the 618 to break out to the upside. So let me take some of this off, for example. Let me just take this off. So you got so many lines on here. Remove all this, and we'll start with a clean slate. And we could kind of look at what's important and just flat out price action. That 6,800 is a critical level. Just taking all that out for the moment. And this is the targets to the upside. That high, well, actually fix that to this new high. And we expect this correction likely is going to come down here. And look where your extensions are. That's 7,000 up to 7,200 area. So far, so good. Not too bad. That's the bubble zone. But do we go lower? 6,800 is critical. if we close below, not a wick, but a candle body below 6,800, the probability we make a move about 150 to 200 points lower to visit that 618. What is the 618? I'm going to remove all of that so you know what the target is up there. Now you use your 2-point tool. And remember, you use the control key, and that uses like a magnet from the low. And you go up to the high, and we start closing below 6,800. That's below the zone here, right? 6,800, that zone starts to set up where we're likely to go. We don't hold this support zone, which is my 618 retracement level. Got it? From that low to that high, that 618 sitting there right around just barely under 6,800. But that's kind of my line in the sand. We break below 6,800. We're going to make a move down to this support zone. And if we don't hold that, then we're going to go onward to the extensions, which is what? 64.60, 64.15. This is the plan that price action should follow. No matter how I slice it, we're going to the bubble hunt, 7,000, 7,200. Do we do it from here and just start breaking out? Possible. Do we retrace further down? Higher probability we get more of a retracement first. And then what if we come down, not only close below 6,800, if you see ES close below that 6,800 on a candle body, again, the probability we're going to drop about 150 points or so to test this 67, 6680, 6600 area is very high. So that's where you're talking somewhere in the neighborhood about 150 to 200 points. Doing what? Closing below 6,800. So what can you do in that example? You can set an alert below 6,800. So I'll do below, just below that little box here I drew. So I want to set an alert to let me know when we cross below 6,800. I want to know. We get a candle body close on a daily time frame below 6,800. The probability we go seeking 6780, 6600 level is extremely high probability. Got it? We take out this battle zone. That's why I like the 6,800, form a resistance. And you can go further back where we were. And this is a battle zone. It was form a resistance here, held as support temporarily, back to resistance, back to support. And we're still kind of holding a support even though we dip this way. Once we close below it, probability we go down 150 points or so is extremely high. Amen? Then what? If you short that, say we close below 6,800, and you short this and we get down to that 67, 6680, 6600 zone, I would definitely be in a position of authority because we very much so could bounce out of that and then go on to all-time highs again. Or if we don't hold that and we start taking out and we close below the 6,600, then the doors ajar to come back toward the Magic Fibo in this 64 and change area. So far, so good. So do we make this a bigger A, B, C, and we come down here? Or is this the end of the little correction we needed, and this is the first steps in breaking out to all-time highs? I don't care what happens. Emil, what if we come down here, we don't hold, then we come down here, still looking for our blow-off top going into next year, right? Maybe first quarter. All year long, we've been talking about a blow-off top. And even when we got to all-time highs over here, I said, I don't think this is the end of the blow-off top yet. Still think we got more to go. And I still think that. And I started saying, well, by year end, maybe first quarter of next year, look at where we are. We're getting close to year end, first quarter next year. So all roads again lead to a blow off top. So write those levels down. ES, close below 6,800. Opportune shorting opportunity for about 150 to 200 points. We don't hold the support zone when we come down here to bounce and go up. What would that look like? Well, you would have this swing point high at this point, and say this declines like we're expecting. We close below 68 and we start coming down here. Then we'll have a swing point low. And if it bounces off of this and we can't break above from the high to the low, the magic level, 618, to warrant going higher in the new all-time highs, then this thing could still break down here, bounce, not break a 618 back to the upside, and give us an additional push lower. And this continues in making a new swing point low, and it ends up with the much bigger picture, A, B, C. So what's it going to be? I think it's a high probability one of the two. But the highest probability of all is we're going to get that blow off top. We come down here, we're going to get the blow off top. We get the bigger correction, we're going to get the blow off top. All roads lead to that blow off top. Fair enough? What about the NASDAQ? I like the NAS. I like the NAS. We kind of talked about when this baby went up, we got this retracement into the sweet spot. Yes, we closed above the 618, but we didn't quite break above the 786 like we did on ES. But it's enough to say that, yes, highest probability we're going to go to 26,700, 27,000. Been looking for 27,000 for some time now. But this high to low, we did what we needed to tell us we're ultimately going to 27,000, at least 26,700 area. But we need a correction for this bounce took a lot of energy, just like ES. And this is setting up for another push lower. Again, what is this box? That is from this swing point low to that swing point high. So remember the bubble. This is where we're going. So I'm just going to remove these lines so we can focus on it. So this is the prior swing point at battle zone. We broke out, kind of tested resistance, support, resistance. So is this a guarantee we're going down here? Well, I think we have a higher probability we're going where? Bubble hunting. But do we come down here first? Higher probability. We have a high probability we're going there. We have a higher probability we're going to come down here, then go up there. Well, what if we don't hold that support zone? Then we're likely getting the bigger A, B, C correction, and we're going to come down to look for even the bigger correction. We still go to a blow off top. So again, all roads lead to the blow off top. The question is, do we need a further retracement? And that's been the plan. We kind of talked about it here. Expect the markets to go down, and we expect we're going to get that retrace before we get to all-time highs again. And so far, it's been spot on. So far, that is, because what have we seen with the NASDAQ? Kind of chopping, grinding, pulling back, likely going down here. So in the short term, be careful. I do think we're definitely going higher, but I still think we're probably going to come test this. So you know what the bubble looks like. So I'm going to remove that lines for you. So we have a clean slate here. And then you take, remember the control key, hold that down, click, 2.2, go up to the swing point high. And that is 25,868, 860, 870. So it looks like this one right there is the all-time high, well, the recent high right there. So from the recent low to the recent high, We start breaking below that 24.6 area. That's this battle zone. Then we have a high probability. We're going to go where? 23.6, 23 zone right there. See it? Kind of where my little bubble is down here. So what's the likelihood we're going to retrace toward this 618 retracement? I think it still looks very good. Ultimately, could this thing reverse here and go breaking out? Sure, it could. But what do we need to flip the script? Because we definitely think, based on the high to the low, we close above that 618, which means we're going up here. But what if, when do we think, is this the end of the correction and we could go reversing out? Sure. Go down to like a 4 hour, get that swing point high, which is right there. Get that swing point high to the current swing point low and do the inverse of this. From that swing point high down to this swing point low, when do we start thinking more bullish than bearish? We got to get above this zone right here. The magic of the 618-786 zone. This is going to be a tough area for us to break above to then start focusing on new highs, working toward that bubble up here, which is, further up. So Emil, if this little bounce here does not go closing above this area, to start focusing on new highs, which is in transit of going to the bubble up here, then the more likely is we still need to come down here. So if this resistance holds and we can't go breaking above that to go out to break to new high and start bubble hunting, then we're probably going to retrace even further to go test that 618 from the prior swing point low. Everybody feeling me? So this is why I said it. This took a lot of energy to climb up here. We started to bog down. We got a retracement. Maybe this is the end. Maybe. But I'm not convinced until we start breaking back above that 25,600 level. We start breaking above that 25.6 area, into this pink box, above that 618. What is that? High to low, 618 level right there. We start breaking above 25,600. Then the likelihood we're going to make new highs looks good. Not all-time highs. Remember, that's way over here, but it would give us these upside targets, making new highs en route to all-time highs. So in closing, be careful. We broke below the Magic Fibo on a 4 hour. We tested it once, failed. We're testing it again. So far, it's failing. So if we end up kind of like the 6,800 we take out, then the likelihood we're going to go lower. Well, here it is for NASDAQ. You take out that swing point low right there, which, let me get some numbers for you. That swing point low is basically 25,000. So we start closing below 25,000, that swing point low. So 6,800 on ES, what are we going to do? We're going to go down and test about 150 points or 200 points down toward that 6,600 zone. If we close below 25,000 on NASDAQ, where we're going, 24.6, 24.3, basically 24.6, 24.3 area. That's the support zone. See it? So we close below 25. We're going about 400 points plus to test that zone. If it is going to break out and we're going to get the last 11 days, start that Santa Claus rally, then we have to get above this resistance zone to warrant shooting for the extension and en route to blow off bubble tops. So far, so good. Russell did what we talked about. Remember a few weeks back, I talked about when Russell started bouncing and across that 618 level from the high to the low. We started talking about it, and I said, you might want to consider buying the Russell, buy the 250, sell the 260 because we expected it to go up there, and that was for IWM anyway, but for 2600, and we reached the 2600 target. Beautiful. So that one played out beautifully, about 175, 200% on that debit spread. Got it? So that's what we're looking for. We got it. Now what? Well, we could get the correction with everybody else, and this thing could still go up to 2,700. But so far, we expected it to get to that target. And what was that target from? Prior high, low, 2,600. We broke above that 618 a few months back, and we talked about it as we dipped and broke back above, high to low, broke back above. Where were we going? Highest probability, 2,600, 2,600, back to back. Beautiful. Now what? Probably, yes, I still think we can go higher eventually, but we're more than likely going to get that pullback after reaching the extension we were looking for. So that IWM spread did very nicely when we discussed it. Remember, no buy, sell to hold at the time. And I say that every day, but that's kind of what I was looking for. Because when I saw this beautiful bounce, we expected it to do what? Go on to 26, basically 260. And that's what we got to, our target up here. Is that the end, or do we correct and then do another one? Well, you got to use the swing point low to the current swing point high. And we're probably going to come down here about 240 area to test that 618 zone. Any questions? So you can see that 618,786 puts us about 240 down to about 235. Kind of align that with it, get it 4 and 2. So is this likely going to retrace further? I think so. Could we come down here, bounce off of this, and still go on to the next target up here at that 265? Yeah, quite possible. But this looks more likely it's ready to go lower. If we don't hold that, then we start going to some extensions below. New swing point low, etc. So be careful. I warned you when we got up here to be careful. We're likely going to see this reverse. And sure enough, that's what's happening. But is this the end of the road and we don't go higher? The IWM could go lower, even though NASDAQ gives us a blow off top and S&P gives us a blow off top, and say the Dow Jones gives us a blow off top. That doesn't guarantee we're going to get that blow off top with this one, but I'm watching price action. We hold this zone, then what, Emil? You do the same thing. We have a swing point high, and then you come down and say we test this box down here, and we get a high, we get a low, we bounce. As long as we can start closing on a daily candle above the 618 back to the upside, that all means say, yep, we'll be targeting 260, 263, which is still en route of the second target of 265. So force price to prove itself. We come down and hold a 618,786 support zone. So this should be green if it's going to hold, right? So we go green on that. And if that holds, we bounce, and then that high to low, we take out a 618 back to the upside. Then we'll be targeting confluence of events at 260, 265 area. But be careful, likely going to get the correction first. Even the mighty Dow, we expected it's going to go toward 48, starting to reach that target. Is that the end of the blow off top? I don't think so. I think we're going higher. Still kind of thinking the Dow is going to break that 50,000 psychological level before we're done. So do we get a correction, then a pop? Sure. And the same rule would be kind of go from the recent low to the high. This needs to be adjusted a little bit to get that 618,786 zone, which was about there. So where should we expect this correction? likely to come test? Do we do the 618 retracement off of that move before we get to the big blow off top and we get towards 50,000? Or if that doesn't hold, then we're likely need to make a new swing point low, just like ES and NASDAQ, and we start targeting Magic Fibo and lower for those extensions before perhaps we bounce and then go up. Any questions? So it played out like we wanted so far. Now we're looking for the correction and then the final blow off top, which will probably put us into, with only 11 trading days left in this year, probably looking at somewhere pushing us out into next year, first quarter. Also, look at the Nikkei, global liquidity. We kind of did not break above from the recent high to low. We couldn't break above this resistance zone to warrant where I think we're ultimately headed, the blow off top up here, basically 54-ish area, 54,000 and higher. Got to 51 and change, 52 and change. I don't think this is the end of the road. I think we are going to go higher. But Emil, is this the A? This overlapping grind, is that the B? And we need to come down in C? Well, I would expect us at least to come test this battle zone. Why is that? That is from the low. And let me make sure I have the current high right here. That high is 51,048, 5132, 5158. Just double checking 5158. So that looks like the high. And we haven't been able to break out to new highs, obviously. And we're stuck at the support resistance zone right there. We bounced. We went to the 618 retracement of the recent high to low, failed, drifting lower. So we don't hold this green box. What's the probability? We don't hold that green box, Emil. Where are we going? Down. Likely going to go in this Magic Fibos kind of sloping upwards. Likely going to go and make a new swing point low. If this doesn't hold, expect a new swing point low. And during that global liquidity pullback, ES, NASDAQ could do the same. And then we go popping for the blow off tops. Any questions on that? So all roads lead us to a blow off bubble top. But the correction, I don't think, is over. So do we come down and bounce here and go higher, or do we break down and make new swing point low and then go higher? We shall see. But in my humble opinion, watch this carefully. 6,800, Harold. We close below 6,800. Nice shorting opportunity for this to go down to 6,680, 6,600, about 150, 200 points. Closing below 6,800. Got it? And if not, we got to go breaking above and take this swing point out before we start targeting this bubble hunting. But like I've been reviewing, all roads lead to the bubble hunt, whether we come down here and do it, we come down here and do it, all roads lead to that blow off top. Only question is be careful where we are. This thing could go from now. That could be the end. But like we were showing on a smaller scale, go to like a 4-hour and take the recent high to low off of that little bit of a correction, take the high to low, and we're struggling. Kind of went up toward the 618, rejected, went up, rejected. So until we can clear this hurdle, there's no reason to believe this is ready to go breaking out. We have to clear that hurdle in order for us to think, okay, yeah, we're going higher. We're going to make some new highs over here. Woohoo! Is that going to happen? Or do we get the further correction? I'm leaning further correction first because this price action is struggling but it is what it is. We closed above 6,900, then we could start talking new highs. We close below 6,800, we could start talking a nice little drop toward that 6,680, 6,600 level. And I prefer to see this type of move to then set up the bounce, because the further we go down, further we got to go to get up to that blow off top. So all those are pretty much setting up the same, right? Same thing with this one, from recent high to low. Until we start clearing this hurdle, NASDAQ is likely going to go down and test this area. Then we are to go breaking above here to go up to new targets. Any question? So we're stuck between a support zone, which is this swing point low, basically 25,000. This 25,000 relates to the 6,800 on ES. And if this thing goes down and closes a candle body below that, then the probability we go down about 400 points or so to test this 24.6, maybe down to 24.3, would be high probability if we can close below 25,000. On the upside, we got to close above 25,600 to set the tone for us to go breaking new highs. So we're stuck between support and resistance. And if we do break the low, we go to target. If we break the resistance, we go to target. Got it? In between, be careful. The closer we get to the end of the year, we have a liquidity just drying up, holiday, etc., limited trading hours, all the things with the 11 days left. You're going to have less and less monies in the market. They're starting to jockey their position to set up for 2026. So we may not get enough push either direction before the end of the year. We'll see how this plays out, but you have your levels. We close above this, we go long. We close below the low, we go short. And if we get down here, we look for the bounce. And again, from that high arrow to what this low might be, we break the 618 back to the upside going in the next year. Then it would set the tone for your all-time high blow off top underway. And all roads, no matter we get a breakout now, we pull back further, then we do it, or we even get the much bigger picture that this was the A, this is the B, and we still need to come down and C. What if that's the A, the B, and we need the C? Even if we don't hold this, where do we go? Down toward the extensions down here, Magic Fibo and lower. But your key point would be we need a new swing point low. If this doesn't hold, we correct down here, it doesn't hold, and we close below that, then all signs are going to say we're going to need a new swing point low. And worst case scenario, we come down here, we don't hold, we come even deeper retracement, and we make a new swing point low. We're still looking for the blow off bubble. Amen? All righty. I think we kind of exhausted that, but that is the plan. You got your levels on ES, you got your levels on NQ, basically have our levels on IWM, expecting this to come down after reaching our number one target, that buy the 250, sell the 260 call out to January, paid off, reached the target. I closed that. Now I'm looking for another opportunity. How is that opportunity going to be? We come down here to bounce and do a bubble blow off top for the end of the year into first quarter. We shall see, but all roads are leading to a retracement back toward the support zone. And what is that? The low to the high, that 618 style retracement. We don't hold that, then we got extensions lower. What about Tesla? Tesla. Woohoo! How is this the beginning of that breakout we've been looking for? Mr. Tesla. I have a lot of TSLL looking for this thing to go ripping. Bought it low, Emil. Looking to sell high. How much higher? We clear this hurdle, we could have a huge move. But in order for TSLL to go that high, Mr. Tesla, the underlying, is going to have to start pushing 600, 700, maybe 800 or more to get way up here. But even if this thing was a dud when we started talking about investing down here, and even after we got a little pullback in the $10 range, it went as low as a $6 range. After that big pull, where did this come from? Last October, I made a bold statement, not a prediction. I leave that to the prophets, but I anticipate with the best of them. God given talent to read and interpret price. In October 24, I made a statement saying you might consider buying Tesla because we're looking for Tesla to make a $500 run, and consider TSLL. And it went from below $10 up to 41.50. And after this pullback, we were looking for the same type of move, right? Big move. So Tesla, being the underlying, is starting to break out down at these lows. We talked about it. We got consolidation, pop to the next target. Now we consolidate, popping to the next target. What are those targets? You have to go out to the bigger picture. And the bigger picture was this high to that low, that 460, 499. We're in the midst of that now. What are the next targets? 530, 560. Well, let's go out even to the bigger picture. You get this high to that low, then we start targeting once we get above that 500. We got 600, 650. Can we do the impossible? And this thing goes ripping up toward 800? Well, if we get anywhere near this 8 to 900 zone, that 272, 2618 zone, where do you think TSLL is going to be? That's where this potential bubble comes in for us to be in the stratosphere up here. But it's going to take Tesla going up to that 7, 800 zone or even higher. Let's be more realistic. The probability Tesla goes toward that 550, 600 is very high. And that is from the recent high to low, 550, 600, say it, 650. So this is extremely high probability target. We already got what we need from the high to low. We took out the 618, 530, 560. That's kind of my 550. And from the prior one here, high to low, 460, we reached it, we pull back. Now we're targeting 530, 560. We get above that, 600, 650. But if we can start pushing the envelope towards 600 and higher, then I expect TSLL will start pushing above 30, seeking maybe the 40, 43 zone. Yep. So what did I make a statement down here? Even if Tesla's a dud, it barely gets to that 550, 600 zone, extremely high probability we're going to be somewhere in that upper 20s to mid 30s. What are we doing? We're almost there. So even if this thing is a dud, still think we got more upside. Amen? Any questions on that? So that's the plan with Tesla. More upside. We're starting to break out. Next target, 530, 560. We break that, 600. We break that, 650. Break that. Maybe go the absurd, 800. We shall see. But the higher Tesla goes, the more TSLL is going to go with it. Any questions? Other one we're kind of keeping an eye on is Meta. Is Meta setting up for a big bounce? Are we going to get it? Or are we going to get this pullback a little further down toward that target? I'd like to see this pull back. And let's go to this lower time frame on a daily so we can see what that looks like from the recent low up to the high. And look at that big rejection wick. Wow. Let me fix that. That was some legitimate price action in there. But from that high to low, are we going to get toward this 618 level? Maybe. Is it going to happen? Let's see, but I'd like to see it come down a little bit further to test that level and see if we can get that. So, Emil, if I can get this to pull back a little bit more, maybe this is the end. Is this the time to do METU, a little leveraged on Meta? Because I think in the big picture, from a recent high to low, we start getting above the 618. From that high to that low, start getting above that 618. Then we start targeting 800, 900, and there's a chance this thing could get up to 1,000 or more, which is a big move, but it probably won't take place until at least 2026. And this thing could drag on into 2027 to go way up there. But what if we don't hold that support zone? Then we get some more downside. So what am I looking for? The more we go lower, the more I'm looking for this thing to go up higher, but it's going to take a while. So that's why I would consider buying METU instead of META at $650. You can buy some METU at $30. Big a difference. So are we going to get this pullback toward this 29, mid 20s, mid to upper 20s? I'd like to see it. So I'm not convinced that this is the bottom and we're ready to go breaking out just yet, but it does set the tone for a beautiful bottom reversal. And then we get a 618 retracement, we hold, and then we rinse and repeat, right, Harold? From the recent high to the recent low, which right now is here, but I'm looking for it to come somewhere down in this area. We start breaking back above the 618, then we start targeting 34, 35, 38. We get above the Magic Fibo, then that bigger picture starts coming into play, 54, 57, which sets the tone. So looking for this to join forces and come over here to Ninja Trader, my Tesla. We started talking about, we got the same Fibonacci retracement extension, Magic Fibo, all that's a part of the software. So we're good to go there. So what can we do? Let me change one of my other charts because I'd like to keep that one. Maybe this AMC that's breaking down. We go to META, Meta, and we're still watching. See if we can start breaking above the 618. But in here, we have the same tools that I use in the charting platform. You go over here to drawing tools. You come down to Fibonacci retracements, the MPA Fibonacci retracement, and we have a swing point high to the swing point low. And we still need to get above this 618 before we start targeting 817, 884, 844, 917. I do think that Meta is going to go higher in the weeks and months and years to come, but how much lower do we go off of this retracement? Notice the much bigger picture for what data we have in on here. You go back to drawing tools and put these all over the chart, but from that recent high to this low, what did Meta do? Went right to our targets. When it did what? It crossed the 618, grinded up there. It took several months from May until about September, into late August, September to get up there. But now we got a recent high to low. We're looking for the same. Is this the little pullback to bounce to start breaking it? But when we start getting above that 700-ish level that we kind of tested and failed, we start closing above that. Then the door's ajar to start going 817, 844, maybe 917. So what does that look like in the METU? Kind of got the same. Let's go to a daily chart. Kind of got the same scenario. So is this the beginning? So the same tools would apply. You go to drawing tools, Fibonacci retracement. We have that swing point high to that swing point low. Need to get it above the Magic Fibo on the daily, setting the tone for 47.50. Nice little bounce for that to go higher. What about the much bigger picture and where I'm thinking in the long term we're headed? You come over here, do the same, drawing tools, Magic Fibo. We got the swing point high, we got the swing point low. We already kind of reached our 618, got a bigger retracement. So we start reaching this 47.50, then we can start targeting 56.60 as meta goes into the 900, 1,000. This thing can start ripping past 60, 70. So it can have some major upside. All right. So is this the bottom and that's the correction already finished? Maybe. Or we go just a little bit lower. I like to see us go just a little bit lower. So I'm going to take these off to show you another picture. Remove. And then stretch this out. To look at this recent pop is why I would like to see just a little bit more downside. Fibonacci retracement from the low up to the high. Love to see us come down at around the 28 zone. It's 28, 27 area right here. That's 618,786. To then set up a breakout. And what would that look like? You can do a 3.2. So I'm going to remove that real briefly. Yeah, click on this end, remove that. Then we use a 3.2. Remember, we have all of this for you. 3.2, Fibonacci extensions. And then we have what? That low up to that high. Is this the end? Or we go just a little bit more to get that 618, right around that 28 and change, 27 and change. Let's just say we get a 618 retracement. Then we can start targeting 37, 39, 42. Onward and upward we go. Other extension back near the high. Further extensions. Well, what's it going to take for METU to go ripping way up there? Meta's got to go breaking out into its 800, 900 for that to push METU. Any question? But this has been rinse and repeat, reach extensions, rinse and repeat. We start closing above this, that METU should start ripping higher because we're going to go up 100, 200, maybe $300 once we start closing above that. We shall see. But again, this is why I'm thinking about buying METU shares, because it could go well into 2026 or even 2027 before it gets up there. Just food for thought. No buy, sell, to hold recommendation. Let's continue. What about CL? Starting to break down, my friends. Is this the beginning of that scenario? Look at our SCO. Nicely done, Harold. It's going up a few bucks. Remember, you had 1,000 shares or 100 shares. Not earth-shattering amount of money, but it's still, we talked about buying it down here in the 17 range, and now we're up $3+ Every bit helps. And how much higher can we go? This thing should go popping up into the mid-20s, low to mid-20s. As oil prices break down, SCO is going to go up. So what's going to continue? We've been talking about this for quite some time. We're breaking the low. Let's see how we close today, right? We're testing the prior low here. We're breaking this new low. So it kind of sets the tone. We're going down. Amen. Could this thing just kind of chop and grind and take some time to get down here? All I could say is this was the plan. Remember, for the longest, for months, I've been saying any rally should be sold. 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 Because we were going, down goes Frazier. Down goes Frazier. So it's not finished. Still looking for the low 50s to mid 40s, right? Somewhere in the bubble. As this goes lower, that SCO is going to go higher. And as soon as CL gets down at, say, $50 or lower, close SCO and buy some UCO. Go from SCO to UCO. Or if you got the big bucks and want to spend more money, then most people will do USO. That's a great way to trade it. Without leverage, if you want some leverage and need a little something extra, then you can buy the UCO. But what is the plan? In my humble opinion, Black Gold, Texas Tea, the Beverly Hillbillies, is setting up a very big, this is what's playing out, A, B, and all of that down in here is C. And once that is done, we're looking for Kapluki, not quite that high. Probably a test near 100. What? That means if we're down at 50 or lower, we could maybe double. Would not be surprised. The technical picture down here in the 50s or 40s, right? At least 50 and lower, I'm starting to salivate for a big, massive reversal and a blow off back to the upside. Why? A, drill baby drill can't operate at these low prices. They need prices to be in the mid 60s or so. Fair enough? It's imperative this thing reverses. Last time we got that big plunge into the mid 50s, what happened? Rockets went off in the Middle East, and this thing reversed from 55 all the way up to about 78. Not too shabby of a reversal. Expecting more of the same. And this bigger picture sets up, we might even get a push back toward this. A potential double from 50 and lower up pushing near that 618 back to the upside. So why am I salivating on this? I've been telling you this is going down. We're doing it. I still think we're going to go lower, then we're going to get a big reversal. Even if it just reverses back into the mid to upper 60s or so, that's still quite the move. And our UCO should go spiking during that period. What did we talk about the other day, Harold? That I didn't think that this was the low over here. We were going to go lower. Check it out. Zoom that baby in. Stretch that out. We are doing exactly what we expected. Oil prices to go lower, and this UCO, ultra crude oil ETF, is likely going to go lower with it. And what am I looking to do? I'm looking to buy UCO shares 16, 15. Maybe we go even lower than that. The lower it goes, the more I like it. Right? Why? Because the lower the share, the more I can buy at lower prices. So should I buy some now? I don't think oil prices has bottomed and reversed yet. I think it's going to go lower. And if we can get down to that $50 range, I expect we're going to be somewhere in that $16 to $15 range. Amen. So I'm good till cancel orders down here. set an alert. We get to around 15, 16 range. I want to know, because when I get my alert, first thing I'm going to do is start buying some UCO shares. No buy, sell to hold recommendation, but the bias is once oil prices dip down in 50 and lower and might go into the mid 40s even. But I'm thinking 50 and lower. When it hits 50, I'll probably start nibbling. Where's UCO when it hits 50? Is it going to be 16? Is it going to be 15? Is it going to be below that? I make just a general statement. UCO below $15 or lower should be a great opportunity, as oil prices should go soaring back up. So too should these UCO shares. And the beauty of buying that is it doesn't matter if it takes 1 month, 6 months, a year, 2 years. There's no expiration on that. Amen? Any questions? So we talked about oil going lower if you wanted to play that with SCO, which we're doing well. Still think there's more upside. Why? Because oil's still not bottom to where we're looking for. So this thing should still continue higher, target up here around 22, maybe 23. Unless oil goes just plummeting down to say 40 bucks, then we might see this thing start breaking out toward 25, retest that high at 24, that type of thing. But we discussed this weeks and weeks and weeks, even months ago, that maybe you want to buy some SCO. As oil prices plummet, this will go spiking. Then once we get oil prices $50 and lower, we want to switch gears for the big bounce in oil. Trade futures, we can do it many different ways, but isn't this playing out beautifully? We're going bubble hunting. Hint, hint, hint. We're going to go bubble hunting. So I expect get down in the low 50s, upper 40s. Been saying 50 and lower. That's kind of my major spot, fine-tuned spot. So you get oil prices at 50 bucks and lower, perfect time in my humble opinion to buy some UCO for the bounce, and it should be somewhere in the 16, 15 range or lower. So I kind of got that little alert sitting there at 1550, kind of splitting the difference in here. So if we can get, would I be fine with buying it at 16? Yeah. Buying more at 1550? Sure. Buying more at 15, 14, 13, 12, 11? The lower it goes, the more I'm going to buy, because what's going to happen, in my humble opinion, once that's over? Oil price is going to go soaring, because drill baby drill can't operate at 50 bucks and lower per barrel. It's going to force prices. Maybe we get some rockets flying in the Middle East again. Anything's possible to get that oil to surge, but that bigger picture, Harold does set up for this ABC correction to finally be over, ABC, and then we get a what? From the high to the whatever the low is, 50 or lower, we might even test at 618, which puts us up near 100. Wow. That is potential of a double. So that UCO being leveraged could quadruple. Do we get in at 15? Quadruple? 60? Amen? See what I'm saying? Again, I can't tell you what to do, but that's my plan, is for oil prices to continue to dip, Mr. Tucson, thrust lower down to 50 or lower, which will put this UCO somewhere around that 16, 15 or lower, right in this area, or lower. And the lower it goes, the more I want to buy shares to take advantage of it when it goes a spiking. And if we can get oil prices to go from 50 and test that 100, then this should test these lows and quadruple, which would put us, say, 15, quadruple, 60. I like it. What if it's a dud? What if oil prices get down in the 50s and only pop and go to the 80s instead of 100, or even the upper 70s? Then this thing could easily double from 15 to 30, still like it, or more. Amen? Worst case scenario, you use the recent high, right? Down to the low. Let's say we get down about 15, just as an example. And all we do, Emil, is we go from there to test that 618 level, about 40. I'll take it every day. Buy at 15, sell at 40, no problem. I think you get the message. So, Dan, as we expected, we're breaking down. I don't think UCO's finished breaking down because why? The underlying. I don't think Black Gold Texas Tea is finished. Now, it doesn't mean it has to go straight down. Every day we get these big red candles, but here's your target down here, minimum 52. Still want to see 50 because it's the big psychological level, and lower. Maybe we get to 45. Possible. Possible. But 50 and lower, that triggers my spidey senses to say, hey, UCO, I'm coming to visit. And if you're in the SCO bounce, then when this baby gets to 50 and lower, it's time to unload your SCO. Amen? And as we get to 50 and lower, sell that, buy the UCO, expecting oil prices to dip down in here and then back to the moon, Alice. That is the plan. This might be one of the better investments going into 26, maybe 27, because it doesn't have to go from here to 90, $100 in a matter of a day, a week, or month. It might just grind its way for multiple months, even in through 26, maybe even to 27. The hardest part is coming up with the timing. Once it's down here, yes, I do think it's going to go much higher, but it's hard to say, well, what if I just do options? I do options. Yeah, that's the way to take it. Why not buy options on a leveraged product? Well, you might want to go skydiving or do something high speed thrill. That's like dousing yourself in gasoline and playing with matches, because leveraged products cut both ways. When a bounce is doing it, it rips. It went from 18 to 28 in a matter of short period. So this thing could go from 15 to 30 or higher pretty quickly. Yeah. But it also could grind and take months. So I don't typically buy leverage products and then throw on options on top of the leverage product. The only time I ever do it with a leverage type of product, it's got to have huge liquidity. If they got massive contracts, millions of dollars in contracts, then I might consider it. But a lot of times these ETFs don't have the huge liquidity like you see with obviously the indexes, et cetera, and big stocks, you name it. I digress, but you get the point. So in closing, if you're going to look to buy UCO, would it be foolish to buy right now? I don't think so, because I still think it's going to go much higher, but I definitely think it's going to go lower. Amen? So I'm looking for a big start to nibble down at 16, somewhere around that 16 range. We're getting closer and closer. The other day we're in the 20s. Now we're at 18. And if oil prices continue to dip down into the 50 or lower, I can't imagine we're not down in here somewhere. So that's when I hear oil prices at 50 or lower, I'm going to instantly start buying probably hundreds of shares, but at least a nice chunk of shares. And then maybe hold my breath and say, well, if it goes lower, what do I do? Panic? No. Do I buy shares at 16, Emil, and then it goes down to 15 or 12 and I sell and take a loss? No. If I buy at 16 and next thing I know, oil price is dipping down toward the mid 40s, and now this thing's sitting down here at, maybe 12 bucks or 14 bucks, do I sell for a loss? No, I just add to my dollar cost average. Buy some at 15, 16, buy some more at 15, buy some more at 14, buy some more at 12, because I'm expecting this thing to explode back higher into next year, maybe into even 2027. Let's continue. What about gold? Gold's at that danger zone. What this reached, and we've done this twice, we got to 3 standard deviations away from the Magic Fibo, and it put us in a tailspin for consolidation for over, what was that, 5 months? April to like September, 5, 6 months. Well, we did it again after that big blow off, and we're likely going to get this baby to consolidate for several months. But this price action right there after the big rip higher, we got this impulsive move lower, and this overlapping looks corrective. So many people think we're going much higher in gold. I agree 100%, but not now. Not now. This looks and screaming, again, in my humble opinion, that looks impulsive A. This overlapping grind is B, and we need to come down in C. So be extremely careful short term if you're just loading the boat on some gold options for this thing in the next week or two. I got some short-term options, January expiration. That gold's breaking out. It's going to 5,000. So I bought some out-of-the-money calls into January at 5,000. I think you're going to be rudely disappointed, and they're going to expire worthless, and they're going to end up down here. Got it? So be careful. This looks overlapping. This looks corrective, so we still need another push. Where does that push us? Back toward the Magic Fibo, and maybe as low as 3,400, this kind of support zone. Amen? A, B, C. So be extremely careful. What does this look like? This looks like the initial A. So it's kind of, if you're zooming in on this. So Gary, that looks the initial move. Well, why isn't this a little 3 wave? And that's the end, and we're ready to go breaking out. Part of the problem is we got a bounce, we retraced, another bounce. This retracement overlapped with that. Then we got another pop, then we got a pullback. That overlapped with that. Remember that story? The overlapping like the dollar index, we kept saying it, it was likely to start breaking down. What has it been doing for us? Breaking down. Is this the end? This, if I wanted to put labeling on this for those that like Elliott wave, that's the big A. That correction is the A. This 3-wave correction is the B. And we come down in C. But from this big A, what do we have so far? That initial move up was a little a. This move down was a little b. And this latest correction up is the little c, making the big B turning into the big C. ABCs, littles, bigs, what the hell? The probability we go up to 5,000, 5K plus, that's the plan, 5K plus, in my humble opinion, is 100%. Can't get any higher odds than that. But in the short term, I think we got a high probability we're going to go make a new swing point low, and that's what we need. A, B, C. Do we have to make a much lower low? No. But technically, the move would put us somewhere around this zone in the Magic Fibo. So I want to see a new swing point low. All it needs to do is make a swing point low, but I'm looking for a little bit more than just a new swing point low. So be extremely careful. Amen? Very cautious that this is going to fizzle and go down first. We did the standard deviations, and since then, we're talking October to December. It's only been a few months. And last time we kind of bogged down for over about 6 months. So this may take several more months before we're done. Ultimately, where we're going, kind of like ES, NASDAQ, etc. Harold, we get the pullback, even the bigger ABC pullback in those. Still think we're going to blow off top. So no matter how low gold goes, and you say it's impossible for it to go down, you know, from 4,300 to 37, 3,600, there's no way it can do that. Well, I don't care how low it goes, the more it's still got to go higher to get the 5K plus. Got it? So that is extremely high probability. I'm just not convinced that's the correction ending and we're just blasting off again. I think this needs that first before we do it. All right. What about silver? Silver kind of reached our extensions. So it's due not just to continue higher, but it's due for a correction in its own right. All right, so I'd be a little leery. Again, I would not suggest, which I can't tell you what to do anyway, so no recommendation either way, but I would not expect this to just keep ripping higher right now. So I would not, and I'm not going to, buy call options on SLV, for example, or futures, not buying, loading up on futures at this price, expecting this thing just to keep ripping higher. I'm looking for that correction. What do we need at least? Well, we got a few of these. We got that swing point low to current swing point high. You would expect somewhere around a maybe $52, $50 range up here, 55/52 zone. So I got too many of these things on here, so let me remove some of them. So from this swing point low to that swing point, somewhere around 55, 52 at least kind of correction. Well, Gary, that's pretty substantial for silver. We're at 63. That's like a $10 decline. Wow. That's what I'm looking for, at least. And could we even go lower? I would love, the lower this thing goes, and you know, I've been a big proponent of silver for years, back during COVID. I don't have that platform open, but you've seen it many times. But back during COVID, when this thing did this shock down in here, what was I? I was like, man, this is an opportunity of a lifetime. This thing is going to go ripping higher from these insane lows. Then even after the pullback, it set up the tone to go much higher. That's just silver futures. But look at the big picture on silver. We go way back. Let's do the weekly. And back in 2011, when we're up at all-time highs at just under 50 bucks, we got the low. That was COVID. Opportunity of a lifetime. What did I tell everyone back then? Silver's going to 50 and higher in the years to come. This was back in 2020. I didn't know it was going to take 5 years to get up there, but the plan was set from these lows, and then the recent pullback and extension, it set it up beautifully. That's why these targets tend to play out high percentage. Now what? What's my next target? Eventually 73, but I do think we need a correction first. Amen? So what did I say a very long time ago? I guarantee silver is going to 60/70 bucks. First part is there. Deeper the correction, the better, because Emil, do the math. What if we go from 60s back toward 50 and get that 618 type of retracement from the low to the high on that lower time frame, and we get that type of correction? Then we got to go about 20 bucks plus to get to the next target. What if we even go lower? And this would be a great place for us to do it. We broke out, we come back and retest the place we broke out from to go ripping to the next extension. That is just typical price action. So this is why I want to see it come back to at least 50, if not lower. All I can say, Harold, if I start buying at 50 and it goes lower, do I panic and sell for a loss? No. I add to my position, add to my position. And the lower it goes, the further it's got to go to reach its next target up at 70. So in closing on gold and silver, be careful. Yes, I think they're both going much higher, but I do think we need a correction, especially silver finally broke out. And it would be logical that now that we broke out, we come back and retest it to set up the next push to 70. All right. All righty. There you have it. What about crypto? Bitcoin's making me nervous. Come out to the daily. We haven't broken the levels I'm really concerned with. That would be the prior low here from December 1st. And then more importantly is the low back in November 21st. Don't want to see a break below that. If this thing breaks below the swing point low, it sets us going into the 70s. Ouch. Ouch. And that could set the tone back toward that swing point, 73, 74. So we take that low out. We're likely going to go test this low. And that would not be good. Is it possible it could come down here, flush out more people, and still go popping to all-time highs? Well, it adds to our crypto winner. If we start breaking below this and we push down here, it may set the tone, high probability. We're going to go into that 10-month crypto winter cycle. So as long as that keeps holding, when do we start to get more sunshine and feeling good about it? We got to get above the Magic Fibo. Critical. And even if it's sloping lower, it's critical we get above that. Plus, from the recent high to low, Emil, James, Harold, Alan, we need to get above 108. That's the 618 retracement. We get that, then it says we're going highest percent, we're going to new all-time highs. So Bitcoin, is this the end? During this correction we're under, and then we go blow off top in the markets going into the end of the year, first quarter, and Bitcoin follows suit and goes blasting off? Or is this the beginning of the crypto winter cycle where I think we go 10 months? Typically it lasts about a year when crypto winter starts. And if this is where it started, it'll push us into late 2026. But look at the bigger picture. We've been talking about this for a very long time. The plan, when it was down here at 20,000 and lower, I kept saying, man, this is an opportunity of a lifetime. You're not going to feel good about yourself knowing you had the opportunity for weeks and weeks where it stayed below 20,000 per Bitcoin, that it would go up to 150. Well, we reach 120, whatever, high up there, 128 or whatever it was, to 126. Is that the end? Not necessarily. We might get that last pop still, but this is the beautiful buying opportunity. So when's the next nibble zone? Late 2026. So even if we get this to pop into first quarter and say the top then comes in, 130 to 150 or so, and then it comes in maybe first quarter, then that would put us into maybe early 2027. Because once the top is in and crypto winter starts, it usually takes like a year, right? Up here, just to show you the last 12 to 18 month run, we got a big dip. We finally finalized this toward the end of the year in like late November. And then from November into November of the next year, kind of bottomed in reverse from the next crypto winter. So we can continue to do this. His was the halving, 12 to 18 month run, kind of topped out in December. And then we started to bottom in December of the next year. See the method here? Starts bottoming somewhere around a year later. So is this the end here? And that 126 or whatever was the end of the road. And that was back in September, October, I guess. Let me zoom in on a daily, get that more accurate. When did we hit that 126 up here? Was October, late October, say October-ish. So does that mean this is the end? And we just keep stair-stepping lower and lower into our buy zone into October or so of 26? Well, if we go full-blown crypto winter, probably so. If we don't, Harold, and this baby holds and recovers, and we start getting above that 108 major zone, sets a tone, we go on all-time new highs again, and that'll delay the crypto winter beginning because you don't pick a high and say that's crypto winter because we pull back. The last time we did that was over here, and I got to go to a 3-day at least to show it to you. But that was the last time we had one of those, and it looked like it was crypto winter because it had a huge retracement, and then we still popped and went on the new high. Crypto winter officially started there, not here. Got it? So if we get that again, and it pushes us out to say first quarter next year, then we'll use that as the crypto winter beginning, and then we'll go into early 2027 as opposed to late 2026. All right, so bottom line, price action is king. And as long as we're testing it, boy, I talked about threading the needle. We have to get a run above 108, close above that to set the tone. We're going 132, 136, 138 up here, excuse me. So is that going to happen? We're hanging on by a thread. What if we don't and we start closing below this? We close below that 80, whatever that low was, 82, 84. Low was 80, right at 80. So there you go. So we start closing below 80. Then the doors ajar to start going down into the 70s, which represents this prior swing point right there. Amen? There you have it. Close below 80, likely going lower. We do that, then it kind of sets the tone that crypto winter is here. And if that ends up being the high for this year and we go into crypto winter, then we're expecting this still to go down in late 2026. If, on the other hand, we pull what we did the previous cycle, where we got a huge retracement, then we went breaking out one more time, and say this happens in first quarter 2026, then we'll look for this to go down for a year into early 2027. Got it? Either way, my plan is to buy Bitcoin somewhere between 50,000 and 30,000. Depending on if we do get the pop, it might adjust this slightly. But if this is the end This is kind of my target zone based on historical movement, and prior history is not indicative of future results, but technically speaking, crypto winter should bring us down in here. And if we pop higher, maybe it elevates that a little bit. All I can say is, like I told you way back in 2022, Bitcoin below 20,000 is a steal. Perfect opportunity for you to take this for the next couple of years and look for this to go ripping higher into 2025 post halving, 12 to 18 months. So what does that cycle look like? We get down here in late 26 or even early 27. Next halving is in 2028. We're expecting this thing, whether we pop, then drop. Well, the more we pop, probably go in a little bit of 27 to then start bottoming and start going and grinding higher toward the halving, and then 12 to 18 months after 2028, going into late 2029. I know that's years from now, but that's the cycle it follows. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Yes, I think there's a chance, and I didn't like the way Ethereum looked more bullish, and then it's taking it right back on the chin, that it went near the Fibo and failed, but we still have this uptrend that's hanging on by a thread, but it's still there, and we don't want to see the same with Bitcoin. I would not like to see that low be taken out, and certainly don't want to see the recent low taken out. Because if we do, that might set the tone that Ethereum is done, and then we look for the next cycle. But in the short term, this thing could still blast off, and until technically speaking, it really diminishes what should happen from the prior cycle, which is over here, all-time high to the low. We took out the 618 and the 786. We were supposed to go to 55/6000, and we're not there yet. So we still have what? 75% we're going to 5,500, 70 plus we're going to 6,000, even though this pullback, but this needs to hold. And why do I like this one? Double combo meal move. From the low to the high, we got a 618 retracement, and we have a weekly Magic Fibo bounce. That's what we call a 618 bounce slash Magic Fibo bounce on a weekly. That sets the tone, and typically when these play out, they are very robust and typically sometimes push toward a 1618, which could potentially put us up at 8,000. It sounds insane. Well, we're barely struggling at 3,000. What do you mean it could go up to 8,000? Well, as long as this 618 holds and we go breaking out, what is breaking out? We got to go from the recent high to low. We got to get above the 618. So we got to start getting above 4,000. We start doing that, it opens the door to 53, 55, and then opens the 63, 66. We break that, then basically 8,083. Is it going to happen? The likelihood it happens if we take this swing point low out becomes very low. The idea we keep going and start bouncing off of this Magic Fibo, and when you look at this, this is typical. You get a double tap, right? We came down, we bounced. Do we need one more? Sometimes we do that. We break, we bounce, we break, we bounce, we break one more time, and then we get the rip. Are we going to do it again? That's why that swing point low is critical. Got it? And the potential to go back up is still very high, especially from the recent high to low. We get back above 4,000, sets the tone. We're going now 55, 6,000 target, and then some. So if you're like I am, I bought some ETHU, I made a lot of money on that over the years. And most recently, I bought a little ETHA on these dips. As long as this holds, what can I lose? Well, I can lose something, or I can just hold it and hopefully for the next cycle. But I only nibbled on this. If this thing starts breaking out, I'm going to add some more. And I'm looking for this thing to go blasting off. But the underlying has to follow suit, Harold. And there's still a opportunity based on that combo meal, low, high, 618 retracement / Magic Fibo bounce on the weekly could set up that low, that high, this higher low. That's not this 1618. That's off this 8,000, which is still possible. So you say, well, why do I see two of those? One of those is from that high. Let me remove it. So this is the 3.2. This swing point low to that swing point high to this higher low. We break above 4,000, sets the tone. We're going where? At least 6,000, 66, 7. But because it's a combo meal, 618 bounce combined with the Magic Fibo at a 618 level, perfect storm for this thing to potentially go up to a 1618 up at 8,000. So am I trying to tell you Ethereum is just at a bargain basement price? I guarantee it's going to 8,000. Can't do it. All I know is we need to hold this level. We don't want to see a new swing point low. And as long as we start breaking back above 4,000, then the targets come back into focus, 55, 6, 7, and we break that, then what's next? That target. Amen? All righty. So take care. God bless you. We love and appreciate you. And as we like to close, that's it. That's all. We'll see you tomorrow.